Welcome to the FML podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your fintech's growth. Join Growth Gorilla's founder and managing director, Shameer Sachdev, and some of fintech's hardest hitting marketers and leaders.
So welcome everyone to today's episode of the Fintech Marketers and Leaders podcast. Today we're joined by Kealan Lennon, founder and CEO of CleverCards. Kealan, thank you very much for joining us today.
Thank you very much.
Good stuff. Let's start off as we always do. Could you share a bit about yourself and your journey so far?
Sure, Shameer. So my journey so far, I'm a chartered accountant. I probably came at fintech quite differently to a lot of other founders that typically may have come from an engineering background. I'm a chartered accountant, as I said. I qualified quite young when I was 21, and I suppose my first big break was when I was 25. I did my first institutional buyout, which was very young, and it was in a later stage, in that it was private equity backed. So it was private equity backed out of Dresner Clonmert Benson out of London. Sold that business for 20 odd million when I was 30 to a big group called Midwest Faco, 35,000 employees, $8 billion in size, and I headed up corporate M&A for them for about 5 years. And since that, then I did a couple of further transactions. So I've had 4 exits, and I set up CleverCards basically to disrupt the payment ecosystem.
Well, I've got to be honest, there's a lot to go through there. I want to jump into CleverCards, but you mentioned that you've had 4 exits. Do you mind just giving us the whistle-stop tour on all of those exits, if that's okay?
Yeah, so look, they varied. They varied from an early stage in, let's say, the radio category in the Irish market. Radio licenses were few and far between, and I was chairman of a group that put a radio station group together and sold out of that. I was involved in education publishing. I was involved in print and packaging, and I was involved in e-commerce. So I've been in a few different categories, which has been extremely interesting, actually, Shameer, because a lot of people can be in a one track, and, business is business, and it's the same analogies, whether you're developing technology or you're developing property or you're developing other stuff, there's a lot of analogies that go the whole way through it. So, look, I'm 53, so I've kind of had a 30-year career, if that's the way to look at it, and with institutional backers from early on. And, I might add, the other interesting thing that happens is that, that the private equity investors who invested in that company when I was 25, the partners in that fund are investors in CleverCards today. The debt providers, the partners are investors in CleverCards today. When I sold the company, the CEO and the family of the underbidder is an investor in CleverCards today. So it follows you through in terms of the deals that you do, and you get involved with great business leaders.
Your relationships have been very, very important, as you've kind of mentioned, in each of those sort of deals. What do you think it is about either yourself or your approach that has allowed you to leverage those relationships, harness those relationships, and make the most out of that to lead you to your kind of position today? Yeah,
it's an excellent question, Shameer, because, I've been asked it a few times, and, kind of in the early days, I was going, I'm not too sure. You have to think about it, like, what is it? And I think there's definitely a few things that are just, hardcored into your personality and your well-being and your principles. And for me, like, integrity is just number one. Okay, absolute integrity. It's a short life. It's it's a small world. When you interview somebody, you get through an interview in an hour, and I always ring the person who's worked with them for 4 or 5 years, because what can you learn in an hour versus what can you hear from somebody who's worked with them through highs and lows and everything else, etc. So integrity is really important. And, after that, then I suppose there are other personality traits that would come through, like competitiveness and, a desire to win and things like that. I think the other thing that I'd throw in, and it sounds corny and it's not, Shameer, and I can categorically assure you, is failure. So much so that there's, I've surrounded myself with some entrepreneurs that are extremely successful, and some of the biggest, the most successful business leaders ever in Ireland and the United Kingdom and further afield. And one of those guys one day asked me to interview somebody for him. He said, Kealan, I have this lady that's working with me, and she's absolutely top drawer in terms of intelligence, ambition. She ticks every single box. And he said, the only thing I'm worried about is that she's never had failure. And so I don't know how she's going to react, if this venture that she wants to do, fails or hits trouble. And every business has trouble. And I don't know how she's going to react in that regard, So having had failures and mistakes, I think people you certainly recognize them yourself when you've had them, you're wary to them. So, when you see somebody that hasn't had failure, the grey hair comes out and you say, look, I've seen this movie before as to how this could turn out. So while you're aggressive in terms of your goals, there's one famous Irish entrepreneur that said his investment strategy is really simple: never lose money. And if you're going to never lose money and that's your starting point, you absolutely go for it in terms of how much you can make in terms of capital appreciation. But it does have you be sensible about risk mitigation, where you can mitigate risks. There's risks within businesses and there's risks external to businesses that you can't. I mean, you can't mitigate for COVID, you can't mitigate for wars, but you can be sensible around how you manage those things.
I want to jump into CleverCards. I think, can you kind of give us an overview of what CleverCards is, what is the proposition, and who are you serving?
Yeah, so look, it's a configurable digital payments platform. So it's a payments platform, CleverCards, okay? And what we do is we make it possible for anyone, anywhere, anytime to be paid instantly. And how we do that is that we enable businesses to issue a configurable MasterCard to their employees. And those employees can use that MasterCard where it's an employee benefit. So the money that's in the account associated with the MasterCard is for the employee's benefit. So like incentive and reward and employee benefits and things like that. So they've got an account and they've got a card that's a digital card, Apple Pay, Google Pay enabled. Or they've got a business card, and the business card is the same principle, but obviously it's for business expenditures. So, your employer, Shameer, can issue you with a card and an account. And the difference is that because it's configurable, we've turned the HR team, or we've turned the finance team in the business, we've turned them into bankers. And what I mean by that is that your boss can say, I am deciding what the credit limit is on Shameer's card, what the expiry date is on your card, where you can spend it. And just to be more specific on that, they could give you a card that will only work on AWS, or they will give you a card that only works for Google Ads, or they'll give you a card that only works in petrol stations. And that's what CleverCards has built. So we've built a digital payments platform to enable anyone, anywhere, anytime to be paid instantly by downloading a digital MasterCard.
A couple of questions around that, really. I mean, is it UK only at the moment, or is it a global proposition?
It's a global proposition, but our focus is very much European at the moment. Our infrastructure, we're integrated directly with MasterCard, which is a huge piece of the infrastructure. And, we're certified by MasterCard to process a payment in sub 1 second anywhere in the world. So to the extent that Stripe or Adyen is a payment processor for merchants, it's called merchant acquiring and payment processing for the retail merchant. We're like the bank that issues the cards, but we're not just holding the deposits. We're also issuing the cards, and we're also the payment processor. We're what we call full stack. And as a result, that's what gives us the ability to delegate the configurability so that, a manager can say, I want to issue a card to an employee for their own benefit, but I don't want, if it's to, let's say, in the Irish market or on the UK market, some other markets, it needs to be a non-cash benefit. So, you think it through, Shameer, how do I give somebody a MasterCard that they can't do a transfer to N26 or Revolut or Barclays or one of the other banks or take out cash? How do you do that? And CleverCards literally goes, we just switch off that functionality because we're the payment processor. So if you try and make the payment and try and do that, it will fail. Similarly, if you say, well, how does it work then with somebody spending ads on Instagram? If you're running the ads on Instagram and you're running, 100 grand a month of ads, you can be given a card with 100 grand on it. But unfortunately, Shameer, it won't work in the restaurants or on airlines or anywhere else. The only place that will work is on Instagram. So it can be brought right down to one single merchant.
Well, I mean, you've answered one of my questions there, because I was actually going to ask about the cash benefits and how that works from a tax perspective. So I suppose that allows you to, instead of giving gift cards or vouchers or whatever it is, it just gives you that sort of level of flexibility. And I suspect that obviously the card can be used over and over and over again, right?
It's a MasterCard. I mean, that's the industry on the employee benefit side of it, Shameer. The incumbent solutions at the moment are paper vouchers, plastic gift cards, and there are also e-gift cards, but they're restricted that it only works in one retail merchant or in a group of retail merchants, as an example. CleverCards has the ability to give somebody a card that works everywhere in the world. So ours are digital, they're tokenized, which means that we've created the ability for them to be added to Apple Pay and Google Pay. So it means that you can use that card online anywhere, and you can use that card in store, in Japan or China or wherever you want, anywhere around the world. And what we've seen is that when you give employees benefits, some people will pay their motor tax with it. Some people will, it's needs must. And with cost of living crisis and everything else, etc., it was really obvious. It wasn't, there was less discretionary spend, and people were spending it using those valuable benefits for other things. Maybe to frame it as well, if I could, Shameer, in terms of what we do. And I'll just touch back to my history in terms of M&A. I mentioned that I'd sold my first company out to Midwestvaco. And one of the deals that we did was we acquired the company that invented the DVD case. So you may remember back to the rectangular DVD case, that plastic case that, and if you think, where is that today? Well, there was a company called Netflix came along and built a digital platform for movies. And if you think of a circular piece of plastic that was a CD, and your younger viewers won't even remember it, but, Steve Jobs came along and said, I'm going to put 1,000 songs in a phone. And someday, Shameer, people are going to say, and our grandchildren, or even our children for that matter, are going to say, do you remember those rectangular pieces of plastic that we used to call debit or credit cards or whatever, until that crowd, CleverCards, came along and built a digital platform for payments? And that's exactly what we're doing. We are the Netflix of payments, and everything that goes with that. You've got wish lists, you've got genre, you've got categorizations, you can see your history, all those things that you can do with mobile and with digital, we've brought across to the payments world. So imagine having a piece of plastic, you can, how do I find my balance? Whereas when it's in your phone, the balance is always on the card. So you can see in real time how much money I've got, and everything else I could go on. But there's the similar type of benefits that go on. So it's disrupting. And then furthermore, when you go into a digital environment, it's one thing having a product that digitally disrupts, but the real higher order winner here is distribution. And if you look at winners like Warren Buffett over the years, you look at Andreessen, that will say, Andreessen did a very interesting study actually with 1,000 companies that they exited, and they said that 998 of them didn't have the best product. There was probably only 2 of them had the best product. What the 998 had was they'd something unique and a moat around their distribution. And that, how many times have we seen some crap product and we're going, yeah, that product is crap, and the next player will build a better product. You build a better product is only half the story. You also have to build the distribution channels. And if you look at the distribution channels for those plastic rectangular cards, what are those distribution channels? They are physical branch networks and banking structures that are legacy, et cetera, et cetera. What's the channel for distribution of Netflix? A whole lot of different digital channels, and that's exactly where CleverCards is at.
Where are you on the CleverCards journey at the moment? Have you sort of hit your stride into growth, or are you still scaling up? Yeah, where are you sitting at the moment?
It's been hyper growth, okay? So when we launched the platform into the market, just kind of middle of the summer, late summer last year, when we went into the market, just literally in the 12 weeks before Christmas, as a matter of fact, even over 8 weeks, we signed up our first 2,500 businesses. So we'd signed up 2,500 businesses in 8 weeks. That's a record in the fintech industry. You look at right across any of the neo players that are out there in our category, some of them have had 5,000 businesses, or one of them has got 4,000 businesses after 5 years. So just give you a sense of the rate of growth that we've had, because we're a digital only solution and we've got lots of things built into our virality and everything else about it. We've got mass distribution of digital cards. We've got some of the largest businesses out there, from the largest banks down to the largest accountancy and law firms, etc. We've got the largest businesses where every single one of their employees, we've got 100% penetration, meaning every single one of them have a CleverCards app on their phone, and every single one of them are using CleverCards. That's better than even, the Revoluts or the N26s or any of the new neobanks have done, where they might have 5, 10, 15, 20% market share in different countries. So we've had incredible distribution in terms of our products. So we've had fantastic growth in terms of the businesses that we've taken on, from small micro businesses all the way through to large enterprises. We've had fantastic distribution in terms of our cardholder base, and we're scaling out our offering now with other products like business cards to enable these businesses to bring more control and save money, and bring more control to the businesses with a modern platform. And look, we don't compete with the banks per se. And the reason being, Shameer, is that, we often talk about the jobs to be done methodology. And if you look at the incumbent solutions that we're effectively competing with, yes, there are corporate cards. There's certain players out there where the cards don't work everywhere, and we're certainly taking market share off them. But there's also what I would say the whole personal card market. So there's a whole bunch of employees all around the world that are using their personal cards for business expenses. No one ever decided. No banker, no network said you shall use a personal card for business expenses. But businesses weren't going to go and give corporate credit cards to every one of their staff. Why? Because the issuers of those, which are the banks, weren't able to configure them or enable the configurability, and they weren't able to issue them in real time and instant. They weren't able to give them instant visibility with a Google Map link as to where it's spent. So we have brought all of that platform to bear, which has unlocked all of that. So now you have a situation where, companies are not losing VAT recoverability because, the employee is given a digital card and it's controlled and the CFOs love it. The employees love it because they don't have to spend business expenses on personal funds and then spend hours reclaiming it and have their manager claiming it. So, we're on a stride. We really are scaling it up at the moment, and we're doubling our team between now and the end of the year. So yeah, no, it's we're thrilled with the way it's going.
I mean, there's lots of questions I want to ask you. I'm going to start right at the beginning, which is, you said that you onboarded 2,500 customers out the gate. And I want to link that back to your point around distribution, which is, how did you make that happen? What was your distribution methodology? How did you get so many sign-ups so quickly? What was the genius behind that?
There's a great guy over in the valley called Andrew Chen, who I follow a lot, and he talks about the cold start problem, okay? And, how to get from 0 to 1 kind of a thing. And we started in a small market like Ireland, where you can get concentration of penetration. It's no different to what Mark Zuckerberg did with Facebook, going into one university and then going to a second. It's no different to what Uber did, going to San Francisco and then New York and take it from there. So it mushroomed. Word of mouth, quite frankly, was what happened, particularly when you've got mass penetration, because when you think of every employee in a business that then goes home, to the extent that they've got partners that are working, straight away the partners heard about it. I don't know how many cases I came across where people said, yeah, my husband or my wife or my boyfriend or my girlfriend, heard about it. So we used it in our firm. So word of mouth, really, virality was how it grew, and kind of, I'm sure you've read Crossing the Chasm. There's so many elements of that where you'll see the early adopters choose the later ones. And like when we landed BDO or we landed Mazars, all of a sudden then you had some other accountancy firm going, well, if they're using it, we use it, and we might be more conservative to them. And, there's an industry verticalization going on as well, where, we've got a lot of scale in different industries because peers in their industries have been using it.
And you said that you'd built in referral mechanisms or virality into the platform. What does that look like?
There's actually inherent virality in the platform. Take one of the large accounting firms, or it's a mid-sized accounting firm we have. It's about 4,500 employees, okay? So, it was only within a week of them getting an employee benefit card that numerous of those employees were into the finance department to say, hey, why don't we use this for all the business expenses? It's just so much easier. There's a Google Map link. You can see where it's spent. We can put client codes on it. So now we can recharge our clients because, ordinarily what was happening was 3 months later, you're doing an expense claim form. It's too late to charge the client and reclaim the client. So they're losing money, So with this, and there's tax tailwinds. I mean, I could go on and on, but, it's just so compelling in terms of the solution that, we were getting inbounds off the back of it to say, hey, can we expand further, So I think there's 2 points I've made in there. That the product expansion is driven from a starting point of having the distribution in place. So when you've got the 100% distribution in place, I don't know who the chief technology officer is necessarily, or the advertising manager in that particular company. There might be 50 people in a mid-sized company and they're all using CleverCards. But the beauty of it is one of those was a finance manager. One of those was a CTO that said, hey, can I use this for my subscriptions? The other was an advertising manager that said, hey, I can use this rather than using the CEO's credit card. CEO has got a credit card and now his phone is pinging every half an hour. You need to authorize a payment because John or Mary is using your card. He's going, listen, we can remove that friction and that problem and that fraud risk and everything else, etc. So by having the penetration is really a phenomenal. If you look at the bigger circle, Shameer, of what's going on here in the banking world, particularly with rising interest rates, CleverCards is a prepaid offering. So it's prepaid. We're a deposit taker in that regard, okay? And if you look at the banking world at large, the treasury team will make money on FX and on deposit interests. The lending team will make money on margin. And, pretty core, certainly in retail banks, the daily active usage, the DAUs that you might have spoken about if you're in Facebook or if you're in something else, we're a DAU product. We're a product that people are using. You've got active engagement on it in a business environment, So, it's a great infrastructural point from which to build on.
Just digging a little bit deeper into perhaps distribution or the marketing side of things, obviously word of mouth virality has played a huge part in the growth of the product. And I think it's very, very important to say, and I think it's very obvious to say here as well, it's been driven by the quality of the product, clearly. But, even with the best product in the world, you have to obviously seed growth at some point. And if you want to scale, you've got to put, kerosene on the fire. So I suppose it's a two-part question, what do you think sort of seeded your initial growth and got you sort of out into the first few smartphones or hands of businesses? And then noting that you're doubling the team and you're looking to obviously expand across Europe, what's your anticipated kerosene for the next sort of 12, 18 months?
I spoke a little bit there earlier about the seeding of it, as I said, where, you started in a concentrated market and, you had a viral effect driven by the quality of the product and word of mouth and all the things that go there. And particularly because, not to get too technical on this, but there's a mathematical formula, K factor virality, which has a numerator and denominator to it. And when you get into it, the time, T for time, is if you compound something daily or compound something weekly or compound something monthly, the end result is a very, very different result. Okay. So we're very fortunate that it's digital and it compounds very, very quickly. Okay. That's the first thing. The second thing is when you've got mass penetration, if you've got two people and you start compounding, a factor of two, it's different if you go in and you've got 4,500 people. So you're already at 100% penetration. So there's a lot of those things went on into kind of just to pad out a little bit further what I said there about the seed. The kerosene piece that you mentioned is exactly where we're at on the journey now. Is that, now we're going to go throw the fuel on the fire. Okay. So we're going to invest much more heavily now in advertising and in marketing. Okay. So that's all of your different typical channels, online as well as offline. And that's what we're going to do in terms of investment, in terms of scaling it out much, much faster. The other thing that we're looking to do is potentially to partner with interesting distribution partners that already have the installed base, so there's certainly a lot of retail banks that are going, well, listen, we've actually got a lot of these very same customers that you're dealing with, or our customers that you're dealing with. Okay. That's another interesting angle. And you have to pick your right partner there because, we all know over the years, there's some fantastic businesses in a different category. And the only thing they're good at is selling what they sell. So you have to be so careful that, they need to be very, very relevant. The sales teams in there need to be incentivized. It needs to be value added and strategic to that organization, and the partner and the distributor needs to get behind it from top level down. But you know what? They'll only do that if it's completely strategic to them. And there are definitely partners out there that, we've had approaches from, whether it's in the fuel area where they've got plastic fuel cards, to employee benefits, to business expenses, to accounting software, to payroll benefits. There's a bunch of them that are saying, listen, this would be really, really strategic to us, either on a digital transformation journey, for a lot of those that are in plastic, because it's very, very difficult and they shouldn't be criticized for it. Market leaders means that they weren't necessarily, born a year ago. A lot of market leaders might be 20, 50, 100 years old. By implication, if you're to go and start digging out those foundations, some of those foundations might be 100 years old. Some of them might be 50 years old. And yes, there might be stuff they did in the last 5 years. But big companies don't move fast, and it's very, very difficult to innovate in a very large company. And hence what, a lot of the larger companies are saying, look, the only way we're going to be able to do this is to acquire, and particularly if something like CleverCards, it's all cloud-based, they don't have to go and plug out that socket and say, whoa, hope the lights don't go off in one of the rooms, so when it's a standalone platform that you can bring in and you can bring it to your customer base, it can rapidly accelerate your digital transformation. And, digital transformation means you're rid of plastic, you're rid of paper. But if you're rid of plastic and rid of paper, dare I say, you're rid of people that are associated with it. And dare I say, you're rid of infrastructure that's associated with it, whether it's physical infrastructure or otherwise. But there's a lot of cost that comes off when you do digital transformation outside of the benefits from a better improved user experience, as well as the revenue opportunities when you move into digital, And the best example I really think is go back to Steve Jobs. People thought he was mad that he was going to sell one tune for 99 pence or 99 cents. Like, why do that when we can sell 12 of them on an album for $15.99? And he wanted to bring a better user experience. And user experience won out in the end because the music industry grew. There was lots more 99p's being bought in volume and in scale. And it's the same thing when it comes to payment and financial services. If you bring that, approach through, you'll reduce your costs, you'll increase your revenue, you'll improve your user experience, you'll give yourself a moat against the competition. And the kerosene for us, I think, is, as I said, direct in terms of, advertising and marketing, but also indirect in terms of, identifying strategic partners that could take the CleverCards platform and drop it into their customers.
Would you do that as a white label solution, or would that be more of a like a JV or partnership?
Yeah, I think everything's always up for discussion. These things. Look, the name CleverCards is quite generic, which is helpful. So we've a lot of people that just use a CleverCard, and if you're a big accountancy firm, do you really care? So, it's different if it's your core accounting software, or if it's your core payroll software or something. So it hasn't. I don't think it's a major issue. And if it's a direct replacement of something, well then absolutely you're into more of a white label. So I think all of those things are things that you work out in the appropriate deal and the economics.
I want to talk a little bit about the product because, I think it's very, very obvious that the functionality of the product has been, fundamentally the foundation for the growth. How much have you iterated the product, say in the last 12 months since initial launch? And I suppose prior to that, how much sort of testing and feedback and what did that process look like? Or did you get lucky and the first iteration kind of hit the ground running and it went somewhat viral?
Fintech is different to, software as a service applications where if something breaks down in customer care, if something breaks down in something, look, no one's going to go to prison, okay? When you're dealing with fintech, it's binary. So from an infrastructure perspective, if I could just get that off my chest for a moment, we went straight to MasterCard. And that was something that was an incredible achievement for us to do, to integrate directly into MasterCard. And MasterCard were hugely supportive, great visionaries in terms of what they did, in understanding that, CleverCards will be the next Netflix of payments, and therefore they want to be at that party and not left outside, okay? So by integrating with MasterCard and getting certified to the MasterCard level, that bar was very, very high. And, all in all, it probably took us 3 years to get to that point, Shameer. Outside of the scale of what was involved, there are multiple parties involved, which someone said to me recently, you're going in a speedboat at 100 miles an hour. It's irrelevant if they're in a tanker that's going at 10. You can keep speeding up all you like. You have to go parallel to them. Okay? And that drives trust and security, which are just paramount in the payments industry. Okay? Sitting on top of that is the applications, which I think is probably more your question, with the application, which is the customer facing layer. But, you can't have a payment system that doesn't work. There's no point in saying, oh, look, sorry, but your card didn't work. So it has to work in 100% of the cases, which it does. And with the applications, we've got two applications, essentially. We've an application for the cardholder and we've got an application for the business. So there's two sides to that. The business is more of your SaaS type offering, and the one for the customers or for the cardholder at least is more like your consumer banking type app. And we've also got an API that we provide into partners where it brings us straight into our infrastructure. In terms of, to answer your question, over the last 12 months, like we're on a weekly release cycle. Okay, so we are iterating very fast all the time, because I go back to it, it's the compounding effect. You are far, far better off releasing fast and quickly, okay, and iterating on it for lots of different reasons outside of the scalability and the compounding effect of it. But also, if you've got a bug or if you've got something, it's easier to whether it's regression testing or otherwise, to see exactly, and the fixes or anything else. If something was to happen in an application, you have less to review than 3 months of work. So, in a long-winded view, I would say the infrastructure side wasn't really your typical Silicon Valley iterative type thing. It was a big build that, now look, obviously creates a moat around what we've done. But, whereas on the application side, it needs to talk to the infrastructure. And as I said, we've iterated on that much more rapidly.
Can you describe to me the culture that you've got over there with your team and how you and your team, face these challenges?
Yeah, so look, I think there's a couple of things. When it comes to anything to do with payments or regulatory or anything else, look, let's face it, CleverCards will be IPO'd or acquired at some stage down the road, okay? Therefore, there's just zero tolerance in terms of cutting any corners when it comes to that area. Zero, because it does come back to bite you. It needs to be absolutely non-negotiable in that regard. When it comes to trying things or innovating around, software applications like that, there's no such thing as failure. So there's a great encouragement in terms of, go and talk to the customer. If they want to put a client code in and you think there's a use case for it, et cetera, Go and do it quick, get the feedback. But there's a very strong theme that we have, and everybody in the organization will have heard it time and time and time again. It's the jobs to be done methodology. We are so focused on the underlying needs of the company, of the person in the company, of the persons in the company. So is it a HR director, a finance director, an employee? And when you understand their need, because the challenge, as you know, Shameer, is that often you might go to somebody and say, look, we've got this at the moment, this is what we're looking for. And you're going, I didn't necessarily want you to give me what your proposed solution is. What I'm really trying to understand from you is, what is your need? And, the example we all quote is, when Henry Ford asked all those people, what do you need? And they said, we want faster horses, Getting to the bottom, that's a cultural thing that goes through the organization to say, don't come in with some solution that doesn't really get linked back to a need. And not being afraid to make a mistake is maybe a better way of doing it. If it's software applications or something like that, just move quick on it. Speed is very, very important because you learn much more quickly, I mean, ultimately our mission is that we want every single employee in Ireland, United Kingdom and Europe, every single employee, when they join the company, they're walking around with a CleverCard in their hand. That's where our vision is for this, and that's the mission we're on.
So, I mean, my next question was going to be, what does the future hold for CleverCards? And I think you've answered that, but is there anything else you want to say?
The distribution side of it, like, we're very conscious in that. We are going to get that distribution. That's the path that we're on, and we're driving for it. It's very, very important. The other side of it is, I told you at the outset of this call or your podcast, that I'm a chartered accountant, and I've lived through .com. I've lived through crashes. And I'm sorry, I'm an accountant and I might be old fashioned, but unit economics are unit economics, and every order needs to be profitable. And I've no interest if it's not profitable. And so it just staggers me when I come across businesses. You kind of think, and the investors are going, have you not learned before? Like, we look at what happened in .com, and you hear some businesses that are scaling at unit economics that make absolutely no sense, but there's a promise in the future they're going to find some way to be profitable. It's not for me. Okay. So for me, it is down to unit economics. And I think, while that was a mantra over the last 2 to 3 years, I was probably less fashionable with that statement. But today, all of a sudden, I'm fashionable because, investors are going, well, maybe that was the right way to look at it. If every order is profitable, well, then you scale it out and you've got a scalable, profitable business, So, we're looking at CAC, cost customer acquisition, and LTV, the value of every card holder. We're looking at that very, 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 very carefully every time we do something. And getting the distribution, it isn't, I want to make that clear, it's not distribution, it's profitable distribution, okay? But how we enhance that profitability is by bringing more products to the marketplace. And as I said, particularly around the one-stop solution for businesses that, from the finance director to the HR, it's one payments platform to enable anyone, anywhere to be paid instantly. And that isn't just cards out to the employees. An extension of that, we've had airlines as well, where they want to do payouts to their customers. And they're going, listen, we need to give a refund to the customer or compensate a customer, whether it's insurance or airlines or lots of other use case incentive and awards. And this is very, very easy to do, because you literally email them a card and they download it to their phone. It's instant. It's as easy as downloading a movie. As a matter of fact, it's faster than downloading a movie. Probably more like streaming it, or downloading a tune, and that's the basis that we have it. So, look, it's a monstrous industry. It's not even in the billions; it's in the trillions. Okay, and it's broken. The financial services industry within the payments category is broken, because those that have controlled it and managed it up to now are basically the banks. They're large. It's difficult for them to innovate. So, it needs fintech innovators, but it needs fintech innovators to remember fintech means financial and then technology. And it starts with financial, and that means regulatory compliance and everything else as well. And that's where you need to start from.
Amazing. I think that's the perfect point to end on. Before I let you go and take you through our quick fire round, what podcasts are you listening to at the moment?
I'm listening to Lenny's podcast, which is Lessons on Scaling.
Yeah, that's quite a popular one. Other than CleverCards, what's your favorite fintech app or product or brand?
A very understood company that arguably is a fintech is MasterCard. It's not just about cards. It's one of the biggest financial services companies in the world. And I have to say, I underestimated it. And by God, you look at the growth and equity value, and you look at what they've done and their vision. I have huge admiration for them.
Are there any books that you're currently reading or you would recommend?
Yeah, I'm reading the biography of a guy called Tony Ryan, and Tony Ryan is the founder of Ryanair. He
Okay.
also was the founder of a company called GPA, which didn't have initially such a successful outcome, but in turn, a little known secret is that outside of Ryanair being the biggest airline in Europe, which is pretty incredible to grow from a small country like Ireland, something like 95% of the aircraft in the world are owned in Ireland because it's the home of aircraft leasing. And that's really because it's spun out of a lot of those executives that had worked for Tony Ryan. And it's a fascinating read in terms of entrepreneurship and what some of these entrepreneurs have achieved, you know.
What's the best bit of life advice you've ever received?
I think it's listening to experience. I have surrounded myself with unbelievable investors that are, if you go through the top wealthiest guys in Ireland, go through the top 20, I think we've probably got about 12 or 13 of them that
Hmm.
have backed me on this CleverCards journey. And it's not just their capital. And, you know, when you get into billionaire status, like a lot of them, but it's the fact that what they have built, you know, they've built some of the biggest companies in the world from a small country like Ireland. They're obviously older than me, generally speaking. And, you know, when I look at my younger self, or I look at what might be my older self and the mistakes I've made and listening to them, the wisdom that I get from them and listening to experience, you know, you just, if someone's been there before, you
Mm.
know, listening to that experience is probably, I'd say, the best advice that I've had. And I was fortunate to get that experience quite young, you know.
Kealan, been absolutely amazing having you on today. Thank you very much for your time.
Thank you, Shameer. I enjoyed it. Thank you very much.
The FML podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk. And make sure to search for the FML podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.